Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is for the trading week ending July 3rd, 2020. Happy 4th of July, all Americans out there. Hopefully you're having a really good, safe holiday weekend. Down here in Florida, a lot of the beaches are closed. I'm sure other places, 4th of July fireworks have been called off or certainly scaled down because of COVID-19. But either way, the markets continue to press forward. This week's theme is the one-eyed king. And even the one-eyed giant is king in the blind territory. Well, if we look at these markets, what I've got on the screen here is going to be a holiday shortened update for this past week. You can see the S&P 500 E-mini futures this past week, which brought to the close Q2. We had total gains for the second quarter of about 19.95% in the quarter. For the S&P, and this was the best quarter performance we've had since 1998, just before the dot-com bubble. And it's the second best quarterly return over the last 30 years, right? I mean, it's really great. Now, keep in mind that, some people may say, well, gee, with this such a good return, then, the market's probably going to pull back here. But if you look at stats and history, we've had 16 other instances where we had a quarterly gain over 10%. And we've seen in those 16 instances, 13 of them, if you go forward 6 months, the market's finished on average higher by 9%. So that tends to suggest that the remaining part of this year going into 2021 could be a strong finish. Now, there's only been really one losing case in the first half of 2000 where the market fell, but only about 1% over the next 6 months. So the odds still remain good for higher price action as we go through the end of this year based on historical patterns. But just keep in mind, COVID-19 changes a lot here, okay? Now, although price action of a lot of the major stocks indexes that we've seen has been very bullish in Q2, we're still seeing a lot of risk indicators out there, like gold is kind of at multi-year highs, bond yields are at record lows, volatility is still a lot higher than normal. So in fact, what I've told our members is that we can expect a little bit of a drop here going into the middle of July into the August timeframes. At least that is what the charts are showing me here. And we did, like I said, finish the week fairly strong. The S&P was up over 4% for the holiday shortened week. NASDAQ up over 4%. Dow over 3% for this holiday shortened week. Even the Russell futures was up just slightly under 4% for the holiday shortened week. So we've had a really strong finish to the Q2 trading action. And part of it was helped by a very strong June jobs report. And I know people are trying to pick at it and dig deeper into the numbers and make things out of it as they wish. But we've had about 7.3 million jobs added over the prior 2 months. So that kind of puts a dent in the 20.5 million jobs lost since April. But we've still got just slightly around 20 million people collecting unemployment. So we're going to see a lot of fits and starts as we go through the remaining part of this year. But I do believe that over the next 12 months, now we should be higher. But there's going to be some instances where markets pull back. So if you look at this chart right here, as I said, E-mini daily chart of the S&P 500 E-mini futures, you can see where we've come up to the 2019 closing price on the futures market. We could not climb over, and the cash index, the SPX, we actually went into the green briefly. Now on this chart, I've got the simple moving average rather than exponential moving average of the 50 SMA, which is in red, and the 200 SMA, which is in yellow. The yellow has pretty much gone flatline. The red, we should get across sometime in the next week or so, but I am expecting price action to come back down. We've tried, you can see just how hard it's been for price action to get up above that key fib node right there. I mean, that's 31.35. I've told our members if we can close above it, we're going to make a run for the green in the month of July. But it's just very, very difficult. You can see all these attempts intraday where we moved above it, but at the end of the day, buyers have always, or sellers have always jumped in and pushed price action back down again. Now we should get across somewhere in the 50 and the 200 EMA coming up this week. this next week after this holiday shortened week. But I am expecting some pullback. Now, in this area here, I had our members picking up puts, and I said the pullback point that made sense to me was the 61.8 fib extension off these pivot lows over here. And sure enough, we came right down and kissed it right there. And then we've been trying to get elevation up ever since, and we can't seem to get it. So what we're in right now is this zone right here, right? I mean, this is the zone that we're in, and we will break it. I believe the odds through July and August favor a break to the downside. Somewhere inside this zone right here, I would call a very wide S1 first level of support zone from 2930 down to 2785. Okay. Now that is given we do not take out that key fib node right there of 3135. Now this is the S&P 500 E-mini futures. Okay. So this is kind of what we're looking at, guys. As I've said over and over again, the lows have been made. Keep in mind the stat that I showed you guys. Anytime you extend in a bear market off the lows, up to and over the 61.8 extension off those lows, then there has not been a bear market since the Great Depression where the markets have come back and made new lows. Okay. So the statistics seem to indicate the lows are in, but that does not mean that we can't pull back and have a little bit of a scare the children moment kind of environment here. Okay. So if we look at this, you can see in this tight zone here, as I've told our members, if we can take out 3135.67, so let's call it 3135, and hold it, then the odds favor us moving into the green near term. But right now, it does not seem to be the case. So the next support element would be the 200 SMA sitting around 3019, and then it's just a short drop down to 3000. And you can see buyers are stepping in very strong once it gets down around the 3000 level, pushing it back up. So again, a holiday shortened update for you guys. I just wanted to give you this update on the S&P, which is generally where the markets are heading. And you can see here on this update that we're having difficulty maintaining this level. And if you look at volume over price, and then I just put it in for a year to date right here, you can see that there is a lot of volume right at this level right here. You can see all this volume right here. That's where all the volume is, and we're trapped. And there's no buyers up in this area here. There's sellers up in this area here. So there's overhead sellers here, and then clearly there's a number of sellers up in this area right here. And then there's buyers down in this level down here, okay, at the lower part or in the middle of these, the fib extension 50% and 61.8 extension. So that just means if we fall inside this no man's zone here, it's going to be a quick move. I believe if we come down, it could be a quick move down to that fib node right there, and then we're going to be stuck between these two fib nodes until we start to pick it back up again. Now, we're not in silly season yet. Silly season is when the elections here in the United States really start to kick in. We got the presidential elections on November 6th, but of course the markets start to react to these elections starting in September, October timeframe. So in the September timeframe, we'll start playing the game based on how it looks like things are starting to stack up. You'll see markets start to hedge both Republican favored stocks versus democratically favored stocks. And we're going to want to play that game as well. So we just need to be careful. But in the summer months, after this huge run up here off these lows, we're now encountering this resistance right at that level right there. So unless we take that out, I think the odds favor a near-term pullback. So this is just a really short holiday updated report for you guys. Have a really great 4th. Members, as you guys know, we won't have a weekly market watch Sunday evening. We'll pick things up with our weekly pre-market trading session on Wednesday morning at 7:30 a.m. Eastern time. If you're not a member, check out our July 4th coupon codes with great discounts on this. We're doing well. We're having a great year this year. Last year was good. So we're just playing the markets as we see them, and we see the opportunities. So guys, have a great and safe July 4th weekend. And we will see everybody back. Members, I'll see you back in our chat rooms Sunday evening going into Monday morning. Take care, folks. Ciao now.